We are going to start our next panel discussion, headed up by Tola Akanami. He will be speaking about real estate as a pension play, overcoming deployment barriers in scale, liquidity, and structure. He is the head of real estate finance, West Africa, Stanbic IPTC, Tola Akanami.
I think in the interest of time, we'll just kind of kick off. Can I get the other panelists to join? Botete. All right, I think it's fine. Okay, I think we can start. This is quite a focused panel, and I think our focus is just bridging from the conversations we've been having all day, and it's really focused on the role the pension funds can play within real estate. We do see that pension funds play a catalytic effect upon the sector. Over time, we've seen pension funds pulled into funds from other global sources and investing on the continent. Recently, we're beginning to also see a bit of consolidation with some of the African pension funds acquiring and creating exits for some of these assets, which is positive. I think a key question to then begin to delve on, whilst we're seeing that growth and increase undertaken by pension funds, is whether, from an asset allocation point of view, we're seeing they are fulfilling the key mandates. Understanding is typically that for such funds, you should be able to invest, up to maybe 15 to 20% of your funds. We're not seeing that yet in the market. It's still skewed towards government securities. So clearly there's a lag and underweight. And if we compare that to the size of these funds, I think in Nigeria, you've got a pension fund of close to 20 billion. In Zambia, it's about 4 billion. In Kenya, it's closer to 10. So there's such a huge amount of capital that can galvanize this space. And that's what this panelist will be speaking to. We've got a good representation here across the core three regions, South and Central, as well as East Africa, and as well as Nigeria. So that's my panelists, and maybe a quick introduction by each person before we start. Yeah, quick one.
Good morning. I'm coming from the National Pension Scheme Authority, Zambia.
Good morning, everyone. Charles Kanugi from Kenya. I think from the advisory perspective, that's what I represent. Thank you.
Good afternoon. My name is Abdul Qadir Mohammed Ahiru. I head the Investment Supervision Department at the National Pension Commission from Nigeria. Thank you.
Okay, yeah. So thank you very much. So just a few thoughts that we've had over time. And how do we begin to, and Botete, this is for you, how do we begin to, the challenges that we've seen within the pension funds, and particularly how do you overcome these in terms of scaling your investment within the sector?
Yeah, as a national pension fund, first of all, I will be speaking from both the public. I'm coming from the public, but I think representing the pension funds in the country per se, both public and private. First of all, let me speak to why real estate. Like Tola, like you've said, pension funds, our mandate is to manage members' funds, right? And pension funds have various asset classes, like we have heard from the previous speakers, and then various asset classes that we invest into, and real estate is one of the key strategic asset class. Why? Because we know that real estate offers the long-term value. It hedges against inflation, okay, and it hedges against the inflation and offers stable investment return. Yeah. So, however, pension funds have they face challenges, hurdles in deploying these real estate development. I'll just speak to two major challenges in scaling real estate, deploying the real estate projects. And I think this one, the first one being accessibility to diverse opportunities. So this challenge, I would speak to it in terms of regulatory and investment guidelines. I think even from the previous presentations we've heard about legal frameworks that govern pension funds on how they can invest, what they should invest into, and the like. So you find that these regulatory frameworks, in as much as we may have opportunities of investment, it's about what do the regulations allow, what do they not allow. And the other challenge is difficulties in sourcing and executing large deals. Pension fund, the core mandate is to collect funds from the members. So you find that pension funds may not have the expertise for executing these large deals and internally. So maybe I would just speak to the two for now.
No, thank you. I think that's very apt. What you've just shared is the asset class understanding, and how to really overlook these opportunities when they come. And I think that's a problem, and I think we'll get to some of that. So just on the back of that, I'll take it to Abdul. Abdul, you manage quite a big, pool of funds in Nigeria. It's quite big, and we're seeing increased investment, and I do know that there's that aspiration. So, in terms of your own views, how have you been able to scale in Nigeria? What development strategies are you adopting, which has seen some of the growth recently, and what are some of the things we should look out for to further galvanize real estate investments? Thank you.
Okay, thank you. Just to clarify, I don't manage. Olumide is one that manages. But like I said, I work with the regulatory body. And, to speak specifically about pensions in Nigeria, we had a very checkered history, coming from the days of defined benefit to a funded scheme. So we have two systems that are running concurrently. So in the private sector, you have a lot of multinational companies that have had pensions since the 1950s. And those pensions are essentially defined benefit schemes, and they are well managed. And a lot of them have significant investments in real estate. I think as of July, we have close to about $300 million invested by these pension funds. But from 2004, you have the contributory pension scheme, which is mandatory for all federal employees, state governments, and private sector. And that is built on individual accounts by individual workers. So in that scheme, we have separate rules because it's contributory. So we have separate rules, and pension funds can only invest indirectly in real estate. So it has to be through vehicles such as real estate investment trust, private equity, or infrastructure funds, or mortgage-backed securities. But in Nigeria, we have realized that if you are talking about REITs, we have only 3 that are currently listed on the stock exchange. I'm not aware of any mortgage-backed security in the market. So we really don't have the instruments for the pension funds to invest. However, we understand that pensions are long-term savings. And in the last few years, as a result of macro instability, high levels of inflation, currency devaluation, these have impacted long-term savings. And therefore, we must align these long-term savings to essentially assets that will be able to secure value. And that's why at the regulator, we're increasingly looking towards real estate, infrastructure funds, and see how we can push pension savings into that space. And that means reviewing the investment regulations, which we have done. We actually got approval, I think, on Monday this week for that. And it essentially means increasing the allowable limits for pension funds to invest in that space.
No, thank you very much for that. I think it's good and great to hear that there is that interest. And I think for the audience and the investors here, it's how to then structure the right products that provide that stability in cash flows. I think some of the things about it is also how the asset class helps to edge against inflation. So it gives you that benefit and capital appreciation, so it should be suitable. Charles, I think to you, given some of the work that I know that you do, I think it would be useful to get a sense of, the asset classes that, because real estate is quite wide, right? There's housing, there's various forms, right? So it's important to, given what pension funds, what their value is and what they're trying to create, the asset classes within the sector that are best suited, and maybe just sharing some thoughts around some of the advisory work you've done within the Kenya market for the pension funds there. Thank you.
Okay. I think the discussions that have gone on, even on this stage, have provided near similar experiences across the market. As Abdul is talking about the regulator, I find that near similar things that the regulator in Kenya will be doing and across the East Africa. And I think if you're to look at the portfolio that our pension schemes hold, is quite significant. I think it is better to mention it in Kenya shilling because it sounds big. So that when I say 2 trillion Kenya shillings, it's huge.
What's that in dollars?
So you can divide that by 130 to find out what that is in dollars. The regulator allows you to invest 30% of that into what they define as immovable property, basically direct ownership. And then they also allow you to invest 30% of that into property trusts, basically the real estate investment trusts. But then when you look at the portfolio structure, I think currently we are around about 11% on both fronts. Of course, immovable property taking the biggest share. But what is also worrying is the trend of it. Over the years, the immovable property has remained constant. So as the funds have grown, because they keep growing mainly from direct contribution, which he has also talked about as the migration from the the defined benefit to defined contribution. So there's a lot of contribution, but there's also investment income that is growing. But where is that investment income coming from? Mainly government securities. So nearly 50% of those funds are invested in government securities. So if you're to ask then where are these real estate investments and how do they come about, I think the challenge to the players in the room is first of all to understand that you need to incentivize the holders of capital. Almost you need to define the need. Working by the mere assumption that they will know the need and therefore they will come after you, that may not cut. I think we've talked about the different asset classes that are available and where we are moving. So it needs to be the desire and the motivation of the developers in the room, of the people who are structuring investment products in the room to come up with those products and incentivize the schemes, guided by the mere fact that the reason why we are parking a lot of money in government securities is they seem to match the long-term element, but also provide very high returns. I think earlier on we saw the interest rates across the markets. So you need to be guided by the fact that that's the benchmark they'll use against you. So you therefore need to beat that benchmark. And I think earlier on somebody mentioned about total return. So again, you need to talk to them about the language they can understand, but they will use the government benchmark to measure you. So I think the asset classes and the institutionalization of those asset classes is an opportunity for all of us, but we need not to sit back, but move ahead and create the need, because the regulator has just mentioned they really need these instruments, but we need to create that need for them.
Okay. Yeah. No, thank you. That's so profound. I mean, you shared the numbers with me previously, but I didn't know it was 30%. That's huge to have. I think what I mentioned initially was 15, 20, but to have, I think there's some lesson for Nigeria to learn there. We are currently at 5, so I think that's a useful point. Butete, I'll just, from your own perspective, what in Zambia, do you have the same issues around asset allocation? And I think just on the back of that, so the first on asset allocation, and then also, what's the opportunity for foreign investment to deploy some of those funds outside your core market? Do you see that? Are you able to achieve that?
That is what we have been able to do, or where we see ourselves going. If I got your question right. Yeah, so I'm glad actually to also learn that even in East Africa, you find that real estate allocation is to the maximum of the 30%. Yeah, so even in Zambia, that's the allocation, the threshold for real estate, the 30%. So, like right now, the investment guidelines that we sit with, which I think is common to other public pension funds, do not allow us to do offshore investments. So we are locally focused. But these investment opportunities do not really lock us up like to just one asset class, real estate asset class. We are able to do all core real estate. We can do core real estate investments. We have seen we've seen the shopping malls, the that is in the retail space, the commercial, and yeah, even also I think in the opportunistic real estate asset class, pension funds have been able to, I'm just speaking to the local since this is our play field, yeah. So in the opportunistic real estate, because of their high return, of course they are high risk, but they offer high returns. So we have been pension funds, or is it the institutional investors, partnering up with the developers as represented, for example, here in this room. We've been able to put up opportunistic real estate development, such as in the hospitality. I think in the current, we can only speak of the hospitality, like for NAPSA, we've seen the Radisson Blue Musotunya Resort, the Garden Court in Kitwe, and the other brands, yeah. So, yeah, the restrictions, the barriers, which could be, in this case, in scalability, are basically due to the large deals and also the lack of expertise and who we are as institutional investors. We are hindered by the fact that for us to deliver a project, we've got lengthy procedures that we are subjected to by nature of our setups. Yeah. So maybe.
I think that's a fair perspective you've shared there, and I was going to link to that, and I think it is in terms. So thank you for clarifying that. I mean, foreign investments are not allowed, but those are things we need to think about. Some of the pension funds that have galvanized the market, are pension funds from other countries. So it's an area we might need to consider just to enhance the returns to beneficiaries at the end of the day. Another thing I would like to just find out is, yes, the pathway, in Nigeria, for example, has been through REITs, private equity funds, but I know long-term it's quite important that the institutional knowledge of real estate is embedded in institutions as well. So, I mean, what's your take on the possibility of direct investments as well, through pension funds? If you can just share your views there.
Okay, I think it's an issue of capacity and experience that has to be embedded in the pension funds. Currently, we think going through structured vehicles like the REITs provide you with certain things around valuation, transparency in how the valuations are arrived at, liquidity, which is also a key consideration. But of course, as knowledge, experience, becomes, as our pension funds go through the indirect way and then build capacity in understanding the real estate space, potentially in the long run, we can open up and consider some direct investments. You have to understand that issues around title are key still, and there are also issues around the Land Use Act. So some of these things have to be cleared, or we will have to find a way to make them, to put in structures that will mitigate some of this perceived risk, to allow pension funds to go in directly. You understand? Because you don't want a situation where somebody put up a building and stamp any price he wants, and then 5-10 years later, at the point you want to exit, or even 20 years down the line, you see that really you are just exiting with the value that somebody, because somebody built the property for a certain amount and just put a higher cap on it because he knows over time it will grow to meet that. It is something that happens a lot in the insurance business, and we don't want to. So I think also some of the things that inform regulatory directives is also informed by your local experience, within your space. But potentially this could happen, but we don't see it happening soon, as far as Nigeria is concerned, except if we're going through maybe things like private equity or infrastructure funds. But there is still the employer sponsor scheme, so the closed pension funds, they are still there. They have deep pockets because you are talking about the oil multinationals.
Yes.
And they are taking positions every day and investing directly.
No, thanks. I appreciate that response, and I think it's fair. That creates an opportunity for funds that want to set up, really, and what you're trying to do there is to bridge the gap you have, and then partnering with stakeholders that that understand the market, understand the technical aspect of the asset class. I
yes,
see that.
And just to add, just recently, I think about 2-3 months ago, the federal government through Federal Ministry of Finance Incorporated set up a fund, a real estate fund, and government put up a first loss capital of 150 billion, and pension funds invested over 100 billion. Actually. So some of these structures, IFC, I listened to some of their presentations. So if IFC can come up and put up equity, you understand me, I'm very sure Olumide will write checks for them.
No. Thanks. I think, and you're quite right there. That was dedicated to housing. I think the last, are we almost done? I think the last I would then ask is then to Charles, just of the point that Abdul shared there in terms of housing shortage. Do you think in the Kenya market, I know there's quite a bit happening in Kenya in terms of housing, and this is now specifically to that segment. What role do you think the pension fund, similar to what has happened in Nigeria, do you think there's a role to catalyze the market? Part of the presentation here was also how residential would grow, and we do see opportunities there.
I think, and to ride on what Abdul said earlier, one of the greatest challenges that the defined benefit schemes had was the large holdings in land. And that's a zero yielding asset that they hold. And one of the things that maybe participants here can figure out is if indeed the position that one holds is that the numbers that were presented here earlier is that one, there is going to be an uptick or a growth in working population, and that population is going to be urbanized more and more, which means that they need more accommodation. The critical question, of course, that comes, the government, especially in Kenya, is looking more towards ownership of housing, but that's one bit of it, because to an institutional investor, maybe ownership of housing is not necessarily what you ultimately want to look for, but it is decent accommodation that is generating steady cash flows that you can use therefore to institutionalize that part of the real estate and then give an instrument to these pension schemes so that they can either partner with you by way of seeding their land banking, and then you come with your development capability and all that you are known for, and then you make a return out of that. I think that's one of the areas where I can imagine would be a very good entry opportunity for any person willing to participate. The critical area that I find is hindering, and I find it across board, is if you have a very nice investment grade asset that is across the globe or that's across the borders, the regulators have not allowed pension schemes to benefit from cross-border investments when it comes to real estate. And I think that's one of the challenges that the regulators need to sit back and ask themselves, what is it that made us to arrive at that position? Is it a risk that we saw? how can that risk be mitigated so that we diversify or increase the pool that these pension schemes can participate in. But for certain, accommodation is a great area of need. The need to make it more institutionalized still remains. The question as to whether you want to enter into it for purposes of exits so that you sell your IRRs is up to maybe your business model. But I also see a play in the yield that you deliver and also the upside that can come with it. And then maybe the institutional buyers can be your pension schemes who can buy in scale. So the area for us to participate in is there. It is the how that we need to define, aware that an exit now is more important than it was maybe a couple of years back. Yeah.
I mean, thank you. I think that's a useful take on what happens within the market. So just to understand, from an housing point of view, what you're sharing is that it's more, what's more ideal is, rental, multifamily investment, not
I know there are those that enter into it for purposes of, exits, so sales, and the government, when it is talking of affordable housing, which is one of the biggest thing that is, or biggest conversation, let me put it that way, that is happening in Kenya. They are looking at it from that perspective, ownership of housing, decent housing that is owned by the occupier. My view is that for participants who are looking at creating scale that institutional investors can participate in, maybe by way of providing an exit mechanism, then the occupier market becomes of greater importance to them, because the one thing that is for certain is that decent accommodation is still a need that is existing, and the question of providing that decent accommodation still persists, and I think there is scope for every developer to consider that. I was also saying that the defined benefit schemes have a lot of land banking that perhaps together with the players that are looking to participate in that area can enter into partnership and have a quick entry into the market. Yeah.
All right, thank you. I think we might be running out of time. I haven't seen a signal yet, but perhaps one key takeaway that each person wants to pass on to the audience, and how we might continue to move on these conversations to ensure that pension funds on the continent continues to play a critical role within the asset class. So maybe we can start from Abdul, and then we take it back.
Okay. What I just want to say is that for the pension industry in Nigeria, we are ready to engage. We are ready to listen. There are a lot of opportunities. We were just speaking during the break. A lot of our major cities, Lagos, Abuja, still have a lot of need for decent hotels, international standard hotels. In this place, within just 1 kilometer radius, you can count, the number of hotels. That is not something that exists in Nigeria. So the opportunity is there. We have a huge urban population. Access to decent houses is still an issue. And you see people, if you see what people are paying for rent and the quality of what they are paying in Nigeria is far apart. So opportunities exist. We are ready to engage. We have a government that is prioritizing reforms. Just we are ready for business. Come and talk to us. Olumide is here. And whatever support you need, we'll provide.
Thank you very much.
I think mine is two front. Number one, for the developer capital allocators, you need to be aware that the parties that have the capital are ready to hear you out. I think this is a case study that we have right here. But we need to be the ones to define the need and go with the solution, because the problems are there, but we need to own the solutions and provide those solutions. The second layer is for the regulators in the room, let us consider more cross-border investments on the real estate front for the pension industry, because I think that localization of ideas is perhaps equally a restrictive move at all. But all in all, I think across board, there are opportunities for us to participate in. Thank you.
Yeah, for me, it's about just encouraging the strategic partnerships, like my colleagues have said. Institutional investors, in this case, the public pensions, like we have heard, they operate under regulatory frameworks and investment guidelines. So it's about just those strategic partnerships which can help the pension fund deliver a project that can guarantee returns and protect the members' funds. There are quite a lot of opportunities in Zambia. I was very happy to listen to the presentation, the research, because one of the areas which is really hit Zambia is in the educational sector is student accommodation. It is a huge crisis. Those of us who've interacted with Zambia, we know this is a real challenge. So we know that we've got private pension schemes that are right now deploying real estate high-grade accommodation facilities. So it's a very attractive area. This is a demand-driven investment. And then for us also, it's I think we are, as NAPSA, speaking from the part of NAPSA, we are also expanding and doing, we are also exploring the student accommodation, by the way. We are running calls. We just closed the call, for instance, for specialized hospitals. Zambia is ready for such kind of partnerships. So yeah, so basically it's about strategic partnerships with the institutional investors. Thank you.
No, very profound words everyone shared. So what I hear is opportunities, product fit, understanding what investors want, and marrying that with what pension funds want to invest in as well. Abdul has shared hospitality. We want to have 4 hotels on one street. I think that would be a blessing. But I think what has come true is that there is an increasing growth of these pension assets within the market. If we think about it, there's an aging there's a population that continues to grow, and those contributory schemes will continue to grow. We've seen it grow over the years. They went there previously to create the exits for some of the assets. So I think what this means is that offshore capital can come in, be it short term, be it long term. There are pools of assets that are winning, yearning, and looking for these opportunities to catalyze long term growth within the market. So thank you very much for listening to our panel session, and I don't know if there's still time for questions. We're done. Thank you very much.
Thank you for those valuable insights, panelists.